another ACCA Masterclass on Cost Volume Profit Analysis, or CVP for short. This essential tool helps businesses unlock profitability and make smarter decisions for growth. Today, this session will be led by Satyarth Dwivedi, an ACCA member with over 14 years of experience in accounting and finance. With a career that spans across top firms like PwC and EY, Satyarth brings a wealth of knowledge that's sure to deepen your understanding of CVP analysis. Get ready to explore how you can use CVP to manage costs, optimize pricing strategies, and drive profitability. Let's dive in.
Hi guys, hope all of you are doing absolutely fine. I'm also absolutely amazing. So let us begin this session where I would take you through certain concepts of performance management which is asked in ACCA. So let me just go ahead with that a bit. What I'm going to tell you, you're going to see it on your screens. So I'll just put the screen in front of you. So please be very focused, and once you understand this, you're going to remember it for life. If you're focused, you're going to remember things for life. If you see things, if you read things with a lot of focus, it's very easy to remember them. So please remember this. Okay, starting on. So I'm going to tell you cost behaviors and CVP analysis, right? Cost behavior and CVP analysis. Now, the cost behavior that I want to tell you over here is about the costs behave in different ways, right? And you can classify them as per their behavior as well, right? So if I want to tell you that a cost that remains constant. So suppose I purchase this entire setup, this computer, this camera and all, right? For the next 5-10 years, it's going to remain constant. This cost will not change because once I've purchased it, it's done for life, right? So there is going to be no change absolutely at all, right? So this cost remains constant, and so it's known as fixed cost. So fixed cost remains constant for a large period of time. Opposite this, right? Against this fixed cost, there is a behavior which changes with the increase. Now, if I produce one video, 10 videos, 100 videos, 500 videos, the cost of this system and this camera is not going to change. This mic, it's not going to change. This pencil, it's not going to change. This whatever screen, my iPad screen, it's not going to change, right? This entire cost is not going to change. So this is my fixed cost. Now if you look at the opposite of fixed cost, which changes, variable cost, which changes with the increase in volume. So if I take the labor cost, my editor's cost, my graphic designer's cost, all of that is variable, right? Why is it variable, sir? Because it's going to change as I change my number of videos. It's going to increase with the number of videos, right? Because my editor charges me per video, my graphic designer charges me per video, right? So this is going to change in relation to the number of videos that I produce. Or if you look at a tomato ketchup factory, right? There are machines for washing, for drying, for pulping, right? So there are machines for washing, drying and pulping, mixing and then bottling. So the cost of those machines is going to remain constant. But if you look at number of the tomatoes that you put in, that is a variable cost. The people who are working on those machines, that is a variable cost. It's a labor cost, it's a variable cost, right? So cost that increases with an increase in volume or number of units. Volume or the number of units that is produced. Right, guys? Now if you look at semi-variable cost. Now this is a very important cost. Now after every few days this cost or every this will be constant for a fixed volume of output, and then it's going to change. For example, a tire in a car, the car's cost remains constant for next 15 years, but tires need to be changed every 2-3 years, because the moment you hit 40-50,000, 1 lakh kilometers, the tires need to be changed. So that's a semi-variable cost. So cost that, so this is material cost, labor cost, right? And semi-variable is cost that changes in after a particular volume, right? Cost that changes after a particular volume of units, right? So now, I think this is the cost behavior. So now let me also draw the graphs for each of these costs. If you see, if you look at the graph for fixed cost, it's a simple graph. It's going to remain constant. For variable cost, it's going to keep on growing, right? So this is the graph for fixed cost. This is the graph for variable cost. Now if you want to draw the graph for semi-variable cost, so it's going to be constant for some amount of time, then it's going to change, then it's going to be constant for some amount of time, then it's going to change, then it will be constant for some amount of time, then it will change, then constant, then will change, then it is constant, then will change, right? So this is your semi variable cost. I hope you are able to understand this particular, right, guys? So moving on to the next part, which is the CVP analysis. So next is the CVP, which is cost, volume, profit analysis, or we also famously know it as CVP analysis, which basically tells me CVP analysis or break-even analysis, or break-even analysis. Now to understand this analysis, you have to understand the cost. Now if you see the simple chart, that's if you take sales and you reduce variable cost from it, if you take sales and you reduce variable cost from it, you come to something known as contribution, that how much your products are contributing to your profit. And when you remove, so there is a marginal costing chart. When you remove fixed cost from it, when you remove fixed cost from it, what you get is a profit. Okay. So sales minus variable cost is contribution. Contribution minus fixed cost is profit. Now what I want to understand is what is that point where I will neither make a profit nor make a loss. So from this entire exercise of doing the sales less variable cost and coming to contribution minus fixed cost coming to profit, I want to know what is my fixed cost, how much of sales units I need to do to ensure that I'm neither producing a profit nor a loss, right? Which means the chart should be somewhat like this. If I take x-axis and y-axis, then my chart should be somewhat like of profit. This should be the cost and this should be my sales, and this should be my total cost. This is my cost, or this is my sales. So I take sales and my cost, total cost, because as I produce more and more units, fixed cost will come down or total cost will come down, but variable cost will rise. So this is the point where I am breaking even, where I am making no profit, no loss, no profit or loss, right? Now there is a very important thing called as contribution to sales ratio, which is contribution upon sales, right? Now if you take this ratio, you can actually find the number of units you want to reach to break even. So I want to find the break even point, so that will be my fixed cost divided by contribution per unit, and this will be in number of units. So if you want to find out in number of units, this is your break even point. Similarly, if you want to find your break even point in terms of sales value, so how much value of sales you should be doing, so it's going to be fixed cost divided by contribution to sales ratio. So if you divide by CS ratio, you'll get the sales value that you need to do to reach the break even point, because ultimately the point is to cover your fixed cost. Only then you are neither making profit nor making any loss. So I hope this part is clear to you. There is also one more thing which comes, for example, that if you want to reach a target profit, what should be your target profit? So that target profit is basically, you take the fixed cost, you add the target profit, and you divide it by contribution per unit. Again, you take, this is in number of units, this will be number of units. Then if you want to find out target profit in terms of the sales value, again similarly, you have fixed cost plus target profit divided by contribution to sales ratio. So I hope these are the important things that you can find out with the help of this chapter, right? This particular concept is based on finding out the break even. Now when you go advanced, when you go a level higher, you also find that how to find out the ratio in these, how to find the break even point in terms of when you are having more than one product, right? So that we'll do in the next class. For now, I think this will be it, and thank you so much for joining. I'll see you next time. Till then, bye bye, take care, namaskar.
found this session valuable, hit the like button, subscribe to our channel, and tell us in the comments below what topic we should dive into next.